After the first hike in interest rates since 2018, Deutsche Bank was the first major institution to forecast a recession in the United States for 2019. By the end of next year or the beginning of 2024, more Fed rate hikes are expected to have a significant negative impact on the U.S. economy. The Federal Open Market Committee predicted in September that the federal funds rate would climb somewhat by the middle of next year. A new target of 2.8% was set by the median predictions of the FOMC members for 2023. Hi guys, welcome back to Glory Investing Show, and in today's video, I'm going to tell you about the recession that will change the USA. If you want to stay protected from the upcoming economic recession, make sure to watch this video until the end. The next recession to hit the US. Even though Deutsche Bank is the first significant bank to forecast an upcoming economic slowdown, the pessimistic outlook of the group is shared by investors of all kinds, including retail customers and investment professionals alike. According to the findings of a survey that was commissioned by Bloomberg Markets Live and carried out between the 29th of March and the 1st of April, more than half of investors believe that the United States economy will enter a recession during the next calendar year. 15% of individuals who participated in the study had the opinion that the recession might begin as soon as this year, while 21% have the opinion that it will not begin until 2024. According to a report published by CNBC on May 24th of this year, as the Federal Reserve raises interest rates to combat the highest inflation in 40 years, tipping the U.S. into a recession is becoming an increasing concern. Still, it's not likely that the U.S. economy will stop growing this year. Former Federal Reserve Vice Chair Alan Blinder told CNBC's Becky Quick during Monday's CNBC special, Inflation and Your Stocks. The report also states a recession is pretty likely, Blinder said. However, he added that he foresees any downturn coming next year as opposed to later in 2022, and that a recession is not an absolute certainty. Quote, I don't mean 89% probability, but maybe 50 to 60% probability, end quote, he said, adding that if there is indeed a recession, he thinks it will be a mild one. Quote, as a consequence of the continued pandemic, the Russian invasion of Ukraine, which is imposing further pressure on already growing consumer prices, and the Chinese lockdowns, which may disrupt supply lines, the economic future is now shrouded by uncertainty. If there are clouds in the sky, there's a good chance it will rain, which would result in a decline in the amount of economic activity taking place in this circumstance. Construction slowdowns impact on housing. The housing market would have difficulties during this era of economic downturn because of variables such as rising unemployment. To begin with, it's foreseen that it would make it more difficult for people to acquire a home, which would result in an even more competitive market. In addition to this, it can make it more difficult to get mortgage loans. It is possible that the economic challenges, in particular a shock to people's incomes in a negative direction and severe unemployment, may lower the number of potential buyers in the market. However, there is reason to believe that the pool of potential homeowners may not decline as much as the jobless claims and unemployment rate may indicate at this moment. This is something that needs more investigation. Before the beginning of the Great Recession, the construction sector was doing quite well for itself. The number of new homes that were constructed in 2006 reaches its greatest level in more than 20 years. These days, the building of brand new homes takes place at a pace that is noticeably slower and more deliberate than in the past. According to data that was supplied by the Census Bureau, the number of building approvals, the number of housing starts, and the percentage of housing that was completed all declined in April of 2020 when compared with March. And when compared with the same month the year before, during the month, there was a decrease of more than a quarter in the number of newly established businesses. This goes to show that these conditions of restricted supply may persist for a substantial length of time in the future. The typical completion time for housing units that have already begun is somewhere around 7 months. It would seem that the following will still be true even after the year 2021. Prices will likely continue to rise, since there is still a scarcity of supply, which is contributing to the problem. There is constantly an increase in the number of potential clients entering the market. The amount of mortgage loan activity that was done for the purchase of new houses increased by more than 30% from the prior year to the current year, as shown by data that was released by the Mortgage Bankers Association. Inflation. the organization that is responsible for officially declaring recessions. A recession is a significant drop in economic activity that is widespread across the economy and that lasts for more than a few months. Recessions are officially declared when economic activity falls below pre-recession levels for an extended period. GDP, which is the worth of all goods and services that are produced in the United States adjusted for inflation, is a significant indication of whether or not a recession could occur. In the first 3 months of 2022, it experienced a decline at an annual rate of 1.4%, marking the first time since the beginning of the pandemic that this has occurred. If GDP growth during the first 3 months of the year is negative, this raises concerns that the economy may be contracting, since most economists think that a healthy yearly rate of growth for GDP is between 2 and 3%. The rate of inflation is also rising, although it has been exhibiting some indications of moderating recently. According to the most current figures available from the Consumer Price Index, the rate of year-over-year inflation was 8.3% in April, which is much higher than the Fed's goal benchmark of 2%. When there is a high rate of inflation, price increases surpass the rise of real wages, which results in increased costs for consumers for items such as rent and gasoline. This is why the Federal Reserve raises interest rates. They did so in March and May, and there will likely be 5 more increases before the end of the year. Because of these increases, the cost of borrowing money will be higher for both individuals and companies, which will have the effect of discouraging expenditure. There is less consensus among economists on the pace of inflation decline, even though most still anticipate expansion of the GDP in 2022. Unemployment. Even though the Federal Reserve has stated that it plans to increase interest rates by a total of 2 percentage points by the end of 2022, Deutsche Bank anticipates that the Federal Reserve will increase interest rates by a total of 3.5 percentage points by the end of 2023. This prediction comes from the fact that the Fed has stated that it intends to hike rates by a total of 2 percentage points by the end of 2022. The estimates that were provided by the central bank indicated that inflation all across the world will grow by 4.3% in just 1 year. The expansion of the economy is anticipated to be 2.8% this year, which is a significant drop from the 4.0% expansion that was anticipated back in December. Deutsche forecasts that the current slowdown in growth will only continue into late 2023 and early 2024 timeframes, and that this will harm employment in the United States. There are around 6 million people that are unemployed in the United States, which has an unemployment rate of 3.6% at present. The slow recovery from the epidemic, which resulted in the loss of employment for 20 million people, may be seen here. If Deutsche's projection turns out to be right, and there is an increase in unemployment of 1.5%, then there will be close to 8 million people without work. The housing market will, like every other part of the economy, be negatively impacted by the recession. This indicates that there is still no way around it. Does this point to the fact that there will be other unsuccessful attempts? There is still a chance that house values will continue to rise, despite all of the depressing news that has been coming out about the economy. Don't forget to grab your free stocks with Moomoo app, link is down below. That's all for today's video. I hope you enjoyed it. If you found this video helpful, make sure you smash the like button and share it with your friends. And while you're here, click to watch one of these 2 videos appearing on your screen right now. I'll see you there. Take care and stay tuned.